All right. Okay. Good morning, good afternoon, good evening, wherever you're listening in from. Man, we have a huge crowd here today. So, first and foremost, I want to applaud everybody for being on the call here today. I really hope that what we share would be able to help you with your trading. I understand that there are people from a vast background and objectives as far as the market and how we want to carve out a profit is all different. So my goal here is to just show you one strategy that I use to help me carve out profits in the market consistently. And again, maybe you've heard me speak about this. Maybe you've actually been using this on your own. That's totally fine. It would just be more of like a confirmation of what we're doing. But if it's something new to you, then hopefully this will help you improve the way you approach the market. And so, what I'm going to be talking about today is what I consider to be a modern candlestick strategy. Candlestick is nothing new. A lot of people know about candlesticks, so I totally get that. But I'm going to show you one that I had to discover on my own and that I use very, very, very successfully. And I'm going to show you how that works here today. My goal is that by the time we're done today, kind of like the last presenter said, whether you join me or not, hopefully this would help you be able to learn how to approach the market without having to guess or hope or wish, but really understanding how to read charts. Does that make sense? So let's start with this. Does anybody know what this type of candlestick signal is? Does anybody know what this type of candlestick signal is? Now, typically, let me see, where's the chat box here? How do I see the chat box? Okay, there it is right there. Okay, great. All right. So typically, and I'm already seeing the answer, which by the way, thank you. I don't know your names. I see 44106, 360428, wherever you guys are. I appreciate you guys chiming in. But typically I hear bullish engulfing, bullish engulfing. And the answer is no, it is not bullish engulfing. Okay. Marabuzu. This is not a Marabuzu either. Very, very interesting. You're the first one, Mark, to even say Marabuzu, but no, it's not. Okay. Pearson, very, very close. Whoever said Pearson is very close. The person that said one white soldier is correct. Very good. Wow, Tom, you are literally, I have to hand it to you. Round of applause to you, Tom. First person that I've ever met or even seen actually answer that correctly. Very, very good. Excellent, Tom. So again, if you know this, you definitely know your candlesticks. And again, a lot of people are aware of candlesticks, but a lot of people are not aware of candlesticks. And so this is something called the one white soldier. Now, before I actually found out, when I first discovered this, I didn't even know what that was at all. So I gave it a totally different name, and until today I use the name that I gave it. It wasn't until later that I found out that it was called a one white soldier. But needless to say, let me show you how this works. But before I do that, very quick disclosure statement. I am not a licensed financial advisor. Please understand that. I'm just here to show you what I have been doing to help me, and hopefully I'll be able to help you too as well. A little bit about my background. I am a technical strategist, technical analyst. I have a background in accounting as well as real estate. One of the biggest things I do is I focus predominantly on technical analysis and also quantitative analysis as well. I used to do fundamental analysis because of my background in accounting, but I learned how to see the correlation between fundamental and technical analysis. And so when I was able to do that, then I started shedding off my fundamental analysis more and more and more and trusting in technical analysis because it basically technical analysis became a visual representation of what I understood from fundamental analysis. So once I was able to see the key elements that I needed to know in fundamental analysis, and I could see that on how it's represented on the charts, then I started relying more on technical analysis and quantitative data from that point on. Because of that, I've been able to call tops and bottoms multiple times, major tops and bottoms multiple times. A few notable ones are the ones that I put on the screen here. The cryptocurrency crash, a lot of people are now beginning to see how bad cryptocurrency is as of this day. I'm not going to go into the pros and cons of it, but the one thing I do know was in January of this year, I literally was telling people get out of cryptocurrencies because again, the technicals were showing me that things were going to go bad for cryptocurrencies. And so I tried to warn as many people as I could at the time. A lot of people didn't listen, but here we are now. I don't want to say I told them so, but it's just like, this to me is again another reason why it is important we understand how to read charts. The market top that we had this year, we were able to point that out before the drop began. The pandemic top, before that pandemic drop started dropping, we were able to call that beforehand. The pandemic bottom in March of 2020, we were able to call that beforehand, and many, many, many others that we have been able to do. Here is proof of what I'm talking about. We have a newsletter that we send out every weekend. And in that newsletter, this was back in 2020, you'll see the dates up here where it says January 24, 2020. This was when I was noticing the top in the market right before the pandemic. Now, I didn't know it was going to be the pandemic at the time, but we knew something was wrong because we could see it on the charts. And that's why in there I said, look, the writing is already on the wall. Take your profits, exit your position. The market is warning us to take heed. This is very serious stuff because we were not playing. We were very adamant about getting out of the market before the pandemic. Again, we did not know it was going to be the pandemic, but it was just the clues that we saw in the charts that allowed us to see that. This is the pandemic bottom that I talked about, where again, March of 2020, you'll see this right here in that report, March of 2020, we wrote about that. And again, it said it was time to cover all our short positions, exit your shorts and get ready for a rally. Why? Because we could see things happen. Here is the report that we wrote in January 2022 when we were talking about cryptocurrencies. And I said, look, the more we zoom out, the clearer it's becoming that Bitcoin is displaying major topping patterns, not little topping pattern, not maybe topping pattern, but major topping patterns. And then we wrote in there that this is going to look ugly. This is not looking good. Chances are very high that Bitcoin is going to suffer for the next 4 to 9 months. Now, how did we know this? All because we saw the warning signs. And this is why I keep on telling people, you do your best to understand how to read charts, and whatever else you have, whatever the strategies you have, your ability to read charts complements that and makes it even more powerful, okay? We were so sure about the crash in cryptocurrencies that I rarely do this, but I actually went out there and I put a recording on YouTube because I said, you know what, people are not, because if you have to understand, back in January of this year, you could not tell a crypto trader that it wasn't going to the moon and beyond. Like nobody was, it's kind of like the, what they call it, irrational exuberance. It was kind of like one of those situations happening. It's like nobody was willing to listen to anybody saying that cryptocurrency was going to go down, So I said, you know what, let me go ahead and put a video out there because I say, we're going to come back in time, and people will see this and they say, well, oh yeah, nobody could have seen that coming. And say, no, we saw that coming. And I'm telling you, understanding how to read charts is very important. Last but not least, this was when we talked about the market top. I'm just showing you proof that we write about these things before they happen, not after they happen. Before they happen, not after. You see right here, here is January 2022, where it says, we are prepared for a bearish drop that can be what? Significant, lasting weeks, if not months. This one is more prevalent on the NASDAQ and the Dow Jones Industrial, but topping patterns are beginning to appear, okay? And so when we made these warnings, like, again, we didn't know how bad it was going to get, but we knew something bad was about to happen. And that is the power of understanding how to read charts. Now, the market has dropped, market has dropped, market has dropped. People are still wondering, are we going further down? Have we hit the bottom? Where are we going to hit the bottom, et cetera, et cetera, et cetera? Well, I'm here to say, like, we're beginning to see signs, again, just like we saw signs in January, beginning to see signs and say, hey, there's a rally coming up. Now, the only issue is we haven't confirmed that to see whether this is the bottom or it's just a relief rally for now. But either way, there's a rally that is about to take place, okay? And so that's the reason why I wanted to share this with you, because I said, however long it takes, whether it's the next 3 months, whether it's the end of the rest of this year, it'll be important to pay attention to certain signals that certain stocks are going to give you so you know what to take advantage of, all right? And so that's why I want to share this with you today. And again, this is a candlestick that we call we call this the right side candle. Okay, now the reason why we called it the right side candle was, again, at the time when I first discovered this, I could not find any information about it. I didn't know the name of it or anything like that. And then my trading partner at the time said, look, if you don't know the name, you can't find any information about it, why don't you create your own rules? And that was probably one of the best things that could have happened, because I think if I had seen the information about it, I would have just gone with what's out there on the internet back in those days. But because I could not find any information about it then, one of the biggest things I did was I had to study it. And I put in a lot of work studying this and say, okay, and there was a lot of questions that I had. Is like, how do I know when it's ready to go up? How do I know when there's a fake signal? How do I know how far it's going to go? Is there a way to project the profit target? How do I know when things have gone wrong? Like, these are questions that I had when I was trying to do my research to figure out what is this pattern that I keep on seeing in the market. The one thing that was very clear was that every time I saw it, I noticed that the stock would move, that would trend really big. And so, again, it was a good thing that I spent a lot of time studying. And so at the end of the day, when I concluded all my research on this, I came up with some rules, and I'm going to share those rules with you. First, number one was, you have to have two opposing colors. It cannot be the same colors. That's one thing I realized. It's like it has to be two opposing colors. One is green, one is red. If you're using a black and white type of candlestick, then one has to be white, one has to be black. If you're using blue and red, one has to be blue, but they have to be two different colors. I prefer green and red. Green lets me know the stock is ready to go up. Red is letting me know the stock is ready to go down. So green and red, that's number one. Number two, for a bullish, because we're focusing on the bullish side now, the green has to always be on the right side and the red on the left side of it, okay? Number three, this is where it becomes very interesting. The top of that green must be above the top of the red, okay? And when I say top, we're ignoring the wicks, okay? We're ignoring the wicks, so we're just looking at the body. So the body of this green candle here, let me actually try that with a black marker. The body of this green candle here, if I was to do this, forgive my drawing over here, all right? The top of this body must be above the top of the body on the left-hand side. You guys got that? Because this is important, all right? Next thing, the bottom of the green body, which is the one on the right, so the bottom right here of this green body needs to also be above the bottom of the red. So this bottom right here needs to be above this bottom. That is how you identify a right side candle, okay? That's how you identify a right side candle. The top of the green, at least according to my rules that I use, the top of the green above the top of the red, the bottom of the green above the bottom of the red. If you guys can understand that, then you've identified what we consider to be a right side candle. So far, so good. In this case, when it comes to a right side candle, we ignore all the wicks. So the wicks doesn't really matter. I just put the wicks there just so we can see, but we don't really care so much about the wicks, all right? Now, here's where it becomes interesting, because once we have identified a right side candle, that's the first step. The next thing is that, look, in order for us to trade this, one of the things I want to do is, the first thing is to draw a horizontal line at the top of that green candle. So in this case, usually I'll just draw it on top of the body, but I put it here just if you want to be conservative. So you have a choice. You can either draw it at the body's top, which is typically what I do, or if you want, you can, if you want to be a little bit more conservative, you look to see where the highest height of that green candle is, and you draw a horizontal line there, all right? Either one would work, but the important thing is the first day you see it, don't do anything but one thing only, which is number 6 right here, draw a horizontal line at the top of that green candle. So if you choose to use the absolute top, or you choose to use the body top, that's fine. Just draw a line, okay? If you want to be more aggressive, use the body. If you want to be conservative, you use the top of the wick. So far, so good. Once that happens, then this is where you wait. You wait for the next candle and only buy if price closes above that horizontal line that you drew. Now, number 8 tells us never buy if it is a red candle. So when we get that confirmation and price closes above this horizontal line, we need to make sure that it is not a red candle. If it is, you wait for the next one, okay? Take a screenshot of this if you need to. These are the rules that I came up with. Now, there's a little bit more rules, but this is just the beginning guideline rules to kind of say, hey, here is a right side candle. Here's how to identify it. And here's how you can tell whether you got confirmation or not. Okay. It's a step by step by step. I don't mind if you have to take this, laminate this, put this beside your computer table. You find you identify a stock that has this and you use it. You can use it on any time frame you choose to use this on. Weekly, daily, monthly, 1 minute, 5 minute, 10 minute. It doesn't matter what the time frame is, because I get that question a lot. It really doesn't matter. As long as you understand what it looks like, you don't make a mistake of trying to say, oh, is a bullish engulfing signal or something else, then you're fine, okay? Now, I always say every candlesticks, I've learned that every candlesticks are not created equal, okay? Almost every candlestick has their own unique quality. And the quality in the bullish right side candle is this. Whenever I see that, especially after a huge downtrend, I know that it is letting me know a strong bullish trend is about to begin. 1. 2, there is a very high chance that the next swing high is going to be taken out. This is huge. This to me is perhaps the biggest thing that I discovered and I get excited about every time I see a right side candle, okay? That once I see a right side candle, one of the unique qualities, I don't know too much of any other candlestick that actually has this strong of a unique quality, and that is whenever this appears, and especially once you get your confirmation on this, all you need to do is look to see where the last swing high was, and chances are now very, very high that it's going to reach that level. The beauty about this is that, again, if let's say the stock was going down like this, let's say the stock was going down like this, and then all of a sudden you see down here a right side candle. I know I have full confidence. Like when I say full confidence, I have I don't even question it. No doubt in my mind that we're going to reach this swing high to the left. So the only question is, by the time we get the confirmation, are we over here? Are we over here? Are we over here? But the beauty of this is no matter where we are, I now know where this stock is going. And this is what I love about the unique quality of a right side candle, is that there's no guessing, there's no hoping or wishing. It's not about a feeling. It's not about, I think it's going to do it. It's like, I know, because this pattern has happened so often. When all my rules are met, the chances of this reaching that level. Now, I'm not saying it's going to go to the moon and beyond. So this is where I'm not one of those parties that believes in the moon and beyond. That's not what I am. But, I'm saying, hey, what can I make between here and here? And the beauty of this is I know I can tell how much profit I can make even before it gets there. I can plan ahead. If you're trading options, this is even huge, humongous, because now you know, hey, this is where this stock can go to. I can do some things between now and when it gets there. Does that make sense? Okay. Here's the bearish side. We're not going to talk too much about the bearish side, but I just want to put this out there so you guys can see this. It's pretty much similar to the same thing. It's like one red and green. This time, the green is on the left-hand side and the red is on the right side. That's it. Now, you flip everything upside down. The top of the red, which is this top right here, needs to be below the top of the green over here. Number 4, bottom of the red down here needs to be below the bottom of the green. That's for the bearish side. Again, you can ignore all wicks if you choose to. Draw a horizontal line at the bottom of the red, because once we've seen the bearish, we're expecting things to do what? Go down, not go up. So in this case, you would draw a line at the bottom of that red candle, and the confirmation is within the next 5 candles, if price closes below this line, then you know it's going to take out the previous swing low. Okay. Now, we usually want to see this bearish one after an uptrend. Okay, so if we're seeing this now and we see a bearish right side here, this is the previous swing low. I'm telling you, you have an 80, 85, 90, 95, even a 99% chance that you're going to take out this swing low, or at least reach that swing low. Knowing this type of information and armed with this type of information, what does that do for you? Can that help you approach the market in a totally different light now? So that way you can take advantage of what the market is trying to do. Okay. So somebody said the bullish right side looks like SPY 812, top was 2 days later. So much not upside though. Okay, so I'll take a look at that, and there's still more rules that we need to like apply to this. Okay, and I'll show you what you need to see as far as that is concerned. Okay, so we'll take a look at that. All right. Any questions about this? But keep in mind, remind me about that. The one that you said 812. We'll take a look at that and see. Okay. Okay. So let's go to the charts. Let's go to the charts and let's see how we can apply this. First and foremost, what I'm going to do here is I'm going to show you the first time I actually applied this very successfully. If you guys recall, this was back in 2016. So I had already done my research. I was ready to apply this into practice. And in 2016, we had the month of January where the market just kept on going down, 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 down. All right. Market went down. Things looked bad. And as you can see right here, on this day, there was still no sign of what was going to happen to the market. Well, the next day comes, and then take a look at what we have now. All right. Take a look at what we have now. Now we have a right side candle. And if you recall, we said, look, we have to have a green and a red, check, right? The green on the right, red on the left, check. The top of the green is higher than the top of the red, check. The bottom of the green is higher than the bottom of the red, check. So we've already had all those check marks now. Now, what was the next one? After ignoring all the wicks, it said, draw a horizontal line. So we're going to do this now. And this is literally how we do this every single time. We draw a horizontal line right here, is what we do, okay? And then we say, wait for confirmation. Now, if you remember to say the confirmation, it has to be a green candle, not a red candle. And the biggest thing is we just want to see price close above this line right here. That's all we're looking for. Next day, boom, we get that. Okay, so on the first day when we see this, we say, oh, wow, we just had the right side candle. What does this tell us? Again, this is not guessing, hoping, or wishing. It's just data. This is data. And the thing about data is it's facts. So I don't have to guess, oh, is that a right side candle? It's like, it is a right side candle. Good. So that's the right side. Now, what do we know? And this is why I said we don't guess, we don't hope, we don't wish. This is not about guessing, hoping, and wishing. It's like, here's information that we now have. What are the things that we need to know about this information? And how do we use this information to benefit us? First, we draw the line. One of the things that we know is that, hey, once that happened, look to the previous swing high. Well, if we look back, this was the previous swing high right here. Okay, so now we say, look, depending on where we get in, because we still need to wait till the next day. We don't know where we're going to get in, but we know this is where we should be expecting things to go. Okay, we know that this is where it's supposed to go. So somebody's asking, at what point do you know that it is a failed example? Number of things. One, if you don't get the confirmation, you know that it's not. But two is if it takes out the previous low going forward, more than the two candles low. So if I got in over here, I'm looking at this candle, I'm looking at this candle. It should not take out that low right there. Does that make sense? It should not take out that low. If it does, I know something is wrong. Because again, what this is telling us is like a strong uptrend is about to take place. That's what this is telling us. A strong uptrend is about to take place. So yes, I can understand if it pulls back a little bit, but if it takes out two previous lows, so it takes out this low here and it takes out the low before that, I know something has gone wrong. It should not do that. And even if it just touches it and comes back up, too much volatility, something is not right. So far, so good. But what we expected is if we can get the confirmation, which is what we have right here. Now, let's just call this 1900. I'm not greedy. I'm not looking for to the moon and beyond. The only thing I'm targeting is what? This level right here. Let's call it 1950. Let's call this 1950 here. So you seeing this, and especially towards the end of the trading day or the end of that candle where there's a 5-minute chart or 1-minute chart, you seeing that is that, hey, you already know that this is where it's going. Now it's just a matter of you saying, what do I want to do? You can buy in options at the money here. You can go out of the money and try to see if you can get something there. And your goal is to just get it up there. Now, when I usually tell people this, oh, it makes sense, it makes sense. But then when the people start getting used to this, then they get greedy. And you know why they get greedy? Because part of it is that what ends up happening is that this starts taking place, where it starts going higher and higher and higher. People are, oh, maybe I should have stayed in there a little longer, okay? Maybe I should have stayed in there a little longer. But if you got into this trade on this day here, on this day, you should have been done. 1, 2, 3, 4, done. So far, so good. That is the power of the right side candle. I'm gonna show you the person that asked, how do you know when it went wrong? Here's a very great example. This was the Brexit, right before the Brexit in 2016 as well. I remember trading this. I saw the right side candle here, just as you guys can see here. Here's the right side candle. I said, great. I drew my line at the top of this right here. Next day, boom, confirmed. Automatically, I'm looking at this and saying, here is the top right here. Oops, let me try that again. Right here. I said, here's the top right here. And I said to myself, here we go. Right here, we should be expecting things to go to that level there, okay? We started going, things are getting closer and closer. And then on this green candle here, this was the day that they had to make a decision. They voted and they said, if, you know, UK was to stay in the Euro, you know, markets will, you know, go up. If it wasn't, market was gonna go down. They came out, they said, we're not gonna be part of the Euros anymore. Market tanked, right? So at this point, my stop loss was on this candle right here, okay? Now, I was literally watching this overnight when the announcement came out in UK. It was still, you know, midnight over here. Market started dropping. And quite frankly, I'll be honest, I actually took out my loss because I was like, you know what, this is more of a news-related event, et cetera, et cetera, et cetera. Now, I should have followed my rules, but what ended up happening was this happened. Boom, took out everything, right? But I didn't get stopped out because I knew, I mean, I already knew the results. And so before the market opened the next day, I just kind of took out all my stops. Not the best idea, I'm not advocating that, but I'm just saying this is what I did that day, right? So I took it out, boom, lost everything, news related, okay? Next day comes, market goes down even further. And I'm like, oh man, I made a mistake. I should have just left my stops in place. I should have let myself be stopped out, et cetera, et cetera, et cetera. I'm feeling bad for myself and everything. And I said, if the market goes down one more day, I'm out. And then I see this. This is what I see. And I was like, oh, wow, here's another one. So at this point, I said, whoa, if this is another right side candle, then that means this swing high is where I can expect things to go. The only problem is I have to draw my line here and wait to see where the confirmation would be. So you guys can help me out. Let's see what happens the next day. This is what happens the next day. And so some people say, well, what if I didn't have time at the middle of the, at the end of the day to do it? That's fine. If you saw this and this was a daily chart, the next morning before the market opens, you can do all your analysis that you want. You can say, wow, we just had a right side candle. It has confirmed this is the level where I expect it to go. The only problem when it comes to even trading this with options is we don't know how many days it will take. That's the only issue. But I know that it's going to make its way up there. And that's what I look for. Okay. So now it's just a matter of like buying yourself enough time, or, you know, using your option strategy, just say, look, the target is up here. My confidence level that is going to reach that level is going to be very huge, unless some major news happens, which I have no control over. What ended up happening was that the market did this. Boom, hit that level. Not only did it take that out, but it took out the original one that we started with before the news came out. We'll show you a couple more on the SPX. This is the 2018 market drop. This was leading into Christmas. This day right here was the day before Christmas, ladies and gentlemen. This day was the day before Christmas, okay? Nothing looked like it was gonna turn around at that time. We go to Christmas, we come back from Christmas, the day after Christmas, we see this. And I'm like, you've got to be kidding me. Is that not a right side candle? Yes. You draw your lines up here. Let me see if I can do this. Come over here. We draw our lines right there. Boom. We wait for the next day. We get this. Okay. Once we get this, where do I believe it's going to go? Where is the previous swing high? Now it's just a matter of time. Like, now notice this, guys, 2,500 to 2,800. I don't expect that to happen in 4 days. I don't expect it to happen in 3 days. So in this case, now you got to change, I mean, that's a lot of ground to cover. And so again, there's an element of understanding this, which I'm going to teach you guys later. It's like, you have to understand, okay, depending on how far we have to go, you have to give it time, because in that time frame, there's going to be volatility. It's not going to be boom, 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 like a parabolic move to the moon and beyond. But what I know is that, look, because this is a right side and because we have such a long way to get up here, I can expect volatility along the way. So we have to adjust things accordingly. But the one thing I know is that eventually it's making its way up there. Does that make sense? And so there are rules that we apply that helps us along the way as we make our way up here. So even though I just said earlier, so 2 candles below, no, this time it's not just the 2 candles below, because something this big is bound to have volatility in between. And so what I did was I came up with another set of rules, which I'm going to be showing you guys when I offer you my offer today, where we institute these rules and say, okay, because we know that there's a lot more room for this thing to go, then we need to be watching a whole different set of data to help us make sure that we don't get chopped out. How do we know when volatility is okay and volatility is not? I promise you, I will give you exactly what you need to be looking for when this happens. Somebody's asking, is it possible to scan for these candlesticks? Yes, there is. Okay, which I am going to show you, because I'm going to be offering you something at the end. I'm having a workshop tomorrow, literally tomorrow night, which I'm going to invite you guys to come and attend. When you come and attend that, I will show you everything. I will show you how to scan them. I will show you how to trade them. I will show you how to, like this that I'm going to show you here, because as you can see, when this started going up, all that stuff that I was saying, like 2 candles and all that stuff, I expect that to happen simply because of the distance between this. So we have a different set of rules when the distance is too much. We say, look, you have to expect volatility. To not expect volatility in a stock that has this type of a distance is just naive. Okay, and so I saw that, I knew that, and next thing I know is I came up with different rules that would allow me to not get stopped out doing stuff like this, but stay in as we watch this thing eventually make it to the top. Okay, the only problem again is we just don't know how many days it's going to take. But the one thing I knew is like, wow, here's a stock that I can get into at somewhere around here that can make it up to here. If you know this stuff and you can start preparing for this stuff and know how to manage it along the way, so that way you're not using emotions, you don't get tricked out, you can actually stay in the trend, but at the same time, if this thing goes into problems, you know what to do to get out. These are the things that I promise you I will show you tomorrow. Okay. Somebody's asking, in the week beginning 12/3, where is that? 12/3. Let's see. The week beginning 12/3. Are we talking? Let me see. Are we talking about this same chart right here? 12/3. You talking about this right here? If you're talking about this, okay. If you're looking at this, I'm assuming is the one you're talking about, or one of these right here. Now, these are not, just so you know, these are not right side candles, okay? These are not right side candles. How do we know that these are not right side candles? The green has to be above the red, correct? So the green is not. Same thing right here. The green needs to be above the red, that's not. If we're looking at these two that I just circled here, those are not. Why? Because rule number one is what? You have to have how many colors? 2 different colors, right? I'm hoping I'm getting the right one that you're pointing to. But if we're talking about these right here, what's happening here is like, this is not a right side. And again, these are my rules. My rules is that it has to have 2 different colors. So does that make sense? If it doesn't have the same colors, it doesn't work. So number 7, next candle does not have to open above the horizontal line, is just the closing that is important. That's correct. Yes. So it doesn't have to open above. If we're talking about this one right here, yes, it doesn't have to open above. It just needs to close above it. Okay. It just needs to close above it. That's what we're looking for. So when we said we need price to close. So if we're looking right here, it doesn't matter what it does all day. I don't really care. Like, so usually I'll just wait to the end of that candle and come back to the end of the day. Boom. Did we close? Now the key is it has to be a green candle. Okay, because if it was a red candle that closed up here, no, let's just assume, I'm just saying this. Let's say this was the right side candle here. You will notice that this red candle closed above this level here, but that would not count because it's a red candle. It has to be a green candle that closed above it. That's all. The close is what's important. Does it make sense? So then we apply a different set of rules, which I'm going to show you guys tomorrow night, and boom, we hit that target. Let me show you what's happening currently right now. This is currently happening, okay? This is currently happening. How do you contact us by telephone? Good question. I'm not sure what my telephone number is. That sounds bad, right? But if you email us at info@rightside-trading, for sure we'll get back to you. That's a promise. We'll get back to you. Yeah, I don't know. My wife handles all the admin stuff, and I'll be lying to you if I said I even knew what my office number is, because she handles all that for me. Okay, sorry about that. But yeah, email us at info@rightside-trading, and we promise to get back in touch with you. Here's an example of what's literally currently happening, ladies and gentlemen. And this is why, if you heard me say earlier, it's like, hey, we seem to be having a bottom pretty soon. And what's going to end up happening is that, you know, whether it becomes the absolute bottom or not, one thing I know is that I'm expecting market to rally. You know, I was on a call about a few weeks ago, and they were asking me, hey, how sure are you that the market is going to go higher? I said, I am 90% sure the market is going to go higher. They said, how can you be so sure? Hopefully you guys can see this right here. Do you know what this is right here? Boom. What is that? A right side candle. Now, we had a right side candle here, but what's the difference between that right side candle there and this one right here? Here's another right side candle that did not work. Why? We didn't get the confirmation. This is why I say you have, when you first see it, the first thing you do is do what? You draw a horizontal line. Boom, just like that. Oh, that's a bad horizontal line. Let me try that again. Okay, boom, you draw a horizontal line. If you did that right here, guess what? No confirmation. Well, we had this horizontal line here. Okay, first day didn't happen. Second candle didn't happen. Third candle, you have up to 5 candles to see this take place. Once that closed, what do we know? We should take out what? This high right here. We're not going to the moon and beyond. This is not a moon and beyond type of situation. This is just, look, we are going to the next level. That's all it is. We're going to the next level, which is that right there. Now we had this right side candle here. You can draw your horizontal line there. Did we get confirmation? No, we didn't. Then we had the right side candle here. Did we get confirmation? Yes. So here's the thing. Now is a matter of, is this the swing high or is this the swing high? And these are the things that I'm going to show you. I'm going to tell you right now, this right here, the top right there is the swing high, but I will show you as well how to see the difference between whether this is the swing high or if this is the swing high. But I'm here to tell you right now, my plan, once I saw this, my plan is that we're going to reach 4,300 or higher. And so this is what I'm saying, look, even if we're still in a bear market, can we capitalize on this new information that the market has given us? This new information the market has given us is like, look, we now have a right side candle that is going to take us from 3,900 to 4,300. Okay, what time frame do you use? It doesn't matter. I prefer weekly and daily. Okay, it's just that depending on where you see it, right? The higher the time frame, the more I know the market is going to continue higher. So because this is a weekly chart, what does this tell me? This tells me that don't be surprised if the market keeps on rallying for the rest of the year. Does that make sense? If this was a daily chart, I'm saying, okay, well, don't be surprised if the market keeps on rallying for the rest of the week. If this is a monthly chart, I'll say, Don't be surprised if the market keeps on rallying for the next quarter. See, this is where you take information and you start interpreting. I'm saying that right. Interpreting. Can't say it right. You know what I mean. You start understanding what is communicating to you. Does that make sense? And this is why candlesticks to me and technical analysis is huge. So to me, I'm looking at this and say, look, I don't know how long it's going to take to get there. There's a lot of room for this to grow between 3,900 and 4,300. But one thing I do know, and I've already put my money where my mouth is by already starting to buy stocks, I'm saying market is going to rally onto 4,300 before we see the next downturn. Now, does that mean we're not going to get volatility in between? Oh, yes, we are. But how do we make sure that volatilities like this, we don't get shaken out? Because what if we have another one along the way and have another one along the way? But we need to make sure the difference between, hey, this is just simply volatility, but hold on tight because things are going to keep going higher, or wait a second, that's a warning sign that things are about to reverse. I promise you, you come tomorrow, I will show you with clear as day. Again, we don't guess, we don't hope, we don't wish. The way I write and do everything I do is that you should be able to, anybody should be able to take the set of instructions and follow it to the T. Okay, just like I outlined step 1, 2, 3, so that when people come and say, hey, this didn't work for me, I say, oh, show me the steps that you went through. And if you say, okay, yeah, I did this, no, well, did you do this step right here? Because if not, then you just didn't follow the instructions correctly. No problem. The good news is, hey, you can correct that. Okay, because if it's just simply learning how to follow instructions, that can be corrected. And that's the beauty of this. This is not guessing, hoping, or wishing, ladies and gentlemen. It's about understanding data and what these data are telling you and having parameters around the way to make sure that it's guiding you to where it needs to go. And so when people ask me, hey, do you think this market is going to? I said, look, right now, I'm bullish right now. Which is very interesting because after what happened last week, Thursday, people say, hey, it's a trap. It's a trap. Don't jump in. It's a trap. And I'm like, trap or not, this thing is going up to 4,300. So in the meantime, I'm going to go bullish. I'm going to stay bullish until either one, the parameters that I have that I'm going to show you tomorrow says, look, something has changed, get out. Or two, I reach my target. One of the two. I heard people say, hey, we've hit a resistance. Things should start dropping next week. I said, I don't believe so. I don't believe so because from what I know of this pattern, and because it's already confirmed it, guess what? I'm expecting this with full confidence that we're going to reach that level. That makes sense? Let's speed things up a little bit. And I want you guys to walk me through this with me. I mean, I'm going to walk through this with you guys, but just again, here is another stock. Here is a right side candle. Did we get confirmation? No, we did not. Market started dropping, and then this happens. As small as this is, what this is showing us is, again, this is a what? Right side candle. So the only thing we need to do now is, look, I know that we now have a right side candle, check. I know that based off of this, I can be expecting price to come to this level if one condition happens, and that is we get confirmation. So we go over here, and this is something that everybody should be able to do. What are we looking for as far as confirmation is concerned? A green candle that closes above that line. Look at this, red candle. Oh man, Wally, it doesn't work. You guys remember what I said? We have up to how many candles for this to take place? 5. Next day, boom. Now, yes, we didn't catch it down here. Now, I know some of you guys will say, hey, well, since it's a right side candle and it has a very high chance of going up, why don't we just stop buying it at 300 and make more money? I said, no, you jumping the gun. You're getting greedy. Don't let your greed control you. Okay, so by the time we got confirmation, okay, yes, a lot of it had ran away from us. That's okay. That's okay. Now we're just saying, look, okay, from here to here, what can we do with that? Right? What can we do with it? Can we make profit that we'll be satisfied with? And that's what trading is all about. Not to the moon and beyond. Not buy on every red candle, but make sure that the data is in your favor and going your way, so that way you can confidently, without guessing, without hoping, without wishing, not a feeling or gut. It's like, this is data. And I have rules, parameters that as long as those rules are in place, we let the trade work itself out. We will see if things go wrong. Boom, boom, boom. Look at that, ladies and gentlemen. It's not coincidence. I always tell people the stock market is not random. Here's where we are today, still going higher. So this is where people get greedy. It's like, wow, how can I make sure that it goes even more than that? That's for another day. But are you seeing how anybody could do this? Let's take another example. Here's another stock going down, okay? How often do you get these signals in today's choppy markets? So very, very good question. I love that question. The beauty of a right side candle is like it doesn't appear in choppy markets. The beauty of it is like when it appears and you get those confirmation like I'm talking about, by golly, you want to take advantage of it. And this is why, if you recall what I said, let me see if I can go back to my slide here. Let's see, I said one of the unique qualities, right? The unique quality of a right side candle is that it lets us know a what? Strong bullish trend is what? About to begin. So if you are looking at choppy and people, oh, choppy market, choppy, I get that. Chances are in the choppy market, you will see a right side candle. And if you do, you won't get the confirmation that you need. Isn't that cool? So that now by the time you see it, and again, I'm going to give you additional parameters to make this like where, again, there's no guessing whatsoever. When you use these additional parameters, it's like, look, I know what to look for. So that way, hey, I know which ones to take and which ones not to. This is huge. All right. So even in this choppy market, look at this. We had a right side candle here, ladies and gentlemen, right? We had this right side candle here. What we would have done is what? We'd have drawn a line up here. Did we get confirmation? No. If we had got confirmation, we'd say here is where it is going to. Then it's up to you to say, do you want to take that trade or not? Because depending on where the confirmation is, then you have to recalculate how much profit you can potentially make. But in this case, did it make it? No. Then we had another right side candle here. We draw this line right here, boom. We say, okay, this is the top right here. What do we need to get? Confirmation, did we get it? No. Then we come over here and then this happens, another right side. Well, what if it fails and it's choppy like the other ones? The only reason why anybody would be in pain right now is because you didn't wait for the confirmation. You didn't follow rule number 7 or step number 7. Okay, you jumped in at step number 4 and 5 and 6 rather than wait to number 7. Same thing right here. So we've done everything. We say, hey, here should be the top right here. Okay. Next day, boom. We got our confirmation that we need. Now what? A $50 to $58 move is what we expect now. That's what I'm expecting. Okay. So now it's just a matter of following some new guidelines that I'm going to show you tomorrow to help us get to that level. Does this work on daily charts and lower? Yes, on any time frame. 1 minute chart, 5 minute chart, 10-minute chart, 30 minutes, an hour, 4 hours, whatever time frame you want. It's just that you have to know the rules that I've created to help make sure that this is going to work for you. And I can go on and on and on. Hopefully you guys get it. Here's another example. Same thing. You can look back and see all the right side candles that appeared. If they didn't get confirmation, it didn't work. Here's another one. Didn't get this confirmation that we needed it to have. Okay, boom, right there. No worries. Here's this, keep on going down. On this day right here, everything seems like, well, there's no hope for the stock. And then this shows up. Oh, wow. Okay, so now we have to choose whether it's going up to this level here or is it going up to this level here? And again, I will show you how to tell the difference between whether this is where it's going to go or is this one right here. Okay, at this point, we know that, hey, we got a right side candle now. Let's go ahead and place our lines there. Rule number 6. Number 7 is to wait for confirmation. At this point, we now have to say from 56 to 62. Can we make money off of this? We're not going to the moon and beyond. We're just trying to carve out a small piece, boom, move on. And that's it. What ends up happening, boom, the very next candle. Okay. If one of the next 5 candles drops below the horizontal line, is an invalid signal. If you're talking about this Not necessarily, okay? Not necessarily. Suffice to say, if it comes back below this right here, the key is at the end of the 5th candle, we need to be above it. That's the biggest thing. At the end of the 5th candle, we need to be above it. So if, like you said, on the 5th candle we're below, I'll say cancel that out, move on to the next stock. Okay, cancel that out, move on to the next stock. But again, if you get your confirmation, very rarely, and again, I'm going to show you, I promise you, just, come to tomorrow's webinar. I'm going to show you the extra additional information you need to make sure that, look, I'm not making mistakes when this happens, okay? So I'm just going to, go through this. I'm not going to go, hopefully you guys can see this. This is our right side candle, boom, we go here, boom, see what happens, boom, okay? Happens all the time. Again, I'm gonna show you the difference. Look, this is a stock that had just had this. Where do you think I expect this stock to go? I expect this stock to make it to where? This level right here. This is in progress right now, okay? Equifax. I expect this stock to make it to this level, pure and simple, right? Here's another one. Sorry, let me do that again. Here we go, right side candle. We expect it to make it to this level up here. The issue is whether we're going to get confirmation. Here's a situation where we got confirmation and it actually went above that. What do you do then? We leave that one alone. You move on to the next one. Does that make sense? Because we've already reached our target. And I put this here specifically so you can see we've already reached our target. So there are times where, again, by the time you wait for the confirmation, boom, it's already hit that target. Don't sit back there and say, oh my goodness, I want to jump in, it can go higher. No. Because before you saw this happen, the agreement was we will get in if we can get confirmation, this is where we're going. If by the time you see the confirmation is already above that, look, it's time to go, okay? Here is what's happening recently in Netflix. Right side candle, where do I expect it to go? I expect this to reach this level up here. This is a daily chart, okay? Notice what happened. We had our right side candle here, next day, no confirmation. We wait 5 days, boom. At this point, from this level here, let's call it 275 to about, let's call this 305. That's where we can expect it to go. Boom, boom, look at this, guys. It's not coincidence. Do we have bearish examples? I could show you bearish examples, but because of time, let me just do this. Let me see if I can show you this. Example of a bearish, let me just do this real quick. Here's the S&P 500. Okay, this is the bearish ones that took place right here, where the market was dropping. This was a bearish right side candle here. Okay, let me zoom in so you can see this. Right here. This is a bearish right side right there. Does that make sense? So that was a bearish right side. Where do we expect it to come down to? To this level right here. We got the confirmation right there. Boom. Came back down, okay? What's the accuracy rate of this? Again, 80, 85, 90, 95%. Again, the thing about it is there are certain circumstances that I'm going to show you that when you see those things, it increases the odds, okay? And let's just put it this way, it will keep you away from the ones that is not going to work, and it'll keep you in the ones that will work, all right? And that's kind of like what it just comes down to. But let me do this because a lot of people are asking, hey, where do I sign up? I got enough. I appreciate you guys saying that. All right, so let's do this. How do you get started with us? Tomorrow, 7:30 p.m., I want you to come join us, okay? I'm going to go into full details of this. This is where I will show you the whole shebang. Like, I'm not even going to hold anything back whatsoever. I promise you, you will leave tomorrow with more information that you probably even knew existed out there, okay? This has been recorded so you can review it, absolutely. Tomorrow's webinar is going to also have it being recorded. So even if you cannot attend live tomorrow, I highly encourage you, sign up for it and come join us, okay? Let me show you the link so that way you guys can know where to go. Is actually just rightsideTrading.com/Kendall, all right? I'm gonna post this in the chat box for everybody right now so you guys can see this. Is in the chat box right now, Now, let me do something. I'm going to come back to all this just for time's sake. Let me just do all this right here. Here's where you go to sign up, okay? You're going to get this workshop. I'm going to give you my top 7 candlestick cheat sheet, because this is just one candle, by the way, okay? This is just one candle. Does that make sense? And so I'm going to show you my top 7. I'm also going to starting tonight, at 8 p.m., we have a weekly analysis room. If you sign up today, we'll give you the bonus of coming into our weekly Monday night webinars as early as today, okay? But the thing is, typically, I would charge $299 for anybody who wants to do this. I reduce the price to $97 and say, look, for $97, there are so many people. Like, the only reason why you should say you don't want to be part of this is simply either 1, you don't need this, 2, you don't have the money, you know, and that's really what it comes down to. Or 3, you already know this information, like, which goes back to the first one, you don't need this. But if this is something where it's like, I never even knew that, like, that's pretty cool. You know, that I learned something today. This is scratching the surface, ladies and gentlemen. I'm gonna show you more stuff tomorrow, and that's my promise to you, okay? But for those who take action today, this is where you get that extra bonus. Now, if you sign up tomorrow, you won't be able to come to the weekly webinar, because again, we're doing this tonight. And that Right Side report, I'm going to give that to you for a whole month at no extra charge. So you get to come to my weekly webinars for a whole month at no extra charge. And I say, one of the things I'm trying to tell people is like, look, you definitely, like, do your best to come to this workshop. And again, even if you can't be there live, the recording is going to be there. It's sent out the very next morning for those who are not able to attend live. But the idea is we pick stocks, we analyze things live so that you can see what stocks to pay attention to, what stock to focus on for the next week, for the next month, et cetera, et cetera, et cetera. Okay. But $97, go here, ladies and gentlemen. Now, let's go back here just so you can see some of the things that you're going to get. You already have an idea, but I always tell people, look, would you like to know how to identify the right ones from the fake ones? Now, some of you guys have been asking that question. Hey, what about this? What about that? You know what? There was a gentleman that asked about the 812. Let me go back there real quickly. 812, who was that? I'm not sure what time frame you were looking at. He said 812. Where's 812? Does this work on day trading futures? Yes, it does. 812. Where's 812? So let's go back here. 812. Right here. All right. So 812. This is what he's talking about right here. So I'm assuming, I'm not sure if that person is still on the call. Whoever asked that question, please help me out. If that's the one that you're referring to or not, help me out here, please. Okay. If this is the one that this gentleman or this person, I'm not sure if it's a gentleman or a lady, whoever asked this question, I'm assuming this is the one that you're referring to, 812 right here on the SPY. If that's the case, then yes, it is a right side candle, but one of the things that you're dealing with is what? We're already in a what? Uptrend. We don't want to see bullish signals after an uptrend. Doesn't make any sense. We want to see bullish signals, what? After a downtrend, because bullish signals are supposed to be what? Reversal signals. Does that make sense? We want it to be reversal signals. So in this case, if this is what, and I'm just assuming because I haven't heard back from you, if this is what you're referring to, then this won't work. This is not what we're looking for. And so this is why I said, you know, you got to understand which ones to pay attention to and which ones not to pay attention to. All right. We want the ones where price have been already dropping, and then you see it because then now we have a good idea of where it's going. A stock that's already doing this, and then you try to buy this, is like we don't have any reference point to get to. I hope that makes sense. Okay, it's just little nuances like this, and I promise you tomorrow I'm going to share a whole lot more so you guys can see. All right, so identifying the right setups, that's exactly what we're doing. It's like, look, yeah, you saw a right side candle, but not all right side candles are the same. You have to have the right setup. This is important. You got to be able to tell the fake ones from the real ones. Now, I've already showed you some of those already, okay, how to differentiate that, but I'm going to go into more details about that tomorrow. What are the conditions on how to use this? This is going to be huge. When to know to use this. You know, somebody already mentioned this. Oh, in choppy markets. Okay, I'll show you how to see when to use this, when to stay away from that. okay? When to trade with stops and when not to trade with stops. That's what I told you guys, because again, we're gonna have some situations where if the movement is gonna be so huge, you gotta expect volatility to happen. So when those huge moves takes place, placing stops is probably, one of the trickiest things that you can do, because if you place a stop where you're not supposed to place it, you find yourself getting stopped out only to see the stock keep on going higher. So I'm gonna show you how to like change that so that you know when you should actually start using your stops, or no, don't use your stops, so that you can let the stock keep on going. How to plan your trades better and transform your trading. Hopefully you've seen that. Okay, we're not shooting to the moon and beyond. There's certain levels we want to get to. If we get there, we can make money. Okay, simplest way to tell when something has gone wrong, and more and more and more. Lose less, win more trades. Okay, do you say you can scan? Yes, I will show you that too tomorrow, how you can scan this so that you can be on your own. You don't need me after that to do what you need to do. Okay, if you come back to us because you just like what we are teaching and you want to kind of like use our guidance to kind of help you until you become self-sufficient. But I will give you all the tools that you need for yourself so that you can literally walk away tomorrow and start doing this all on your own. Okay. And again, I'm going to give you all these other stuff. So let me just do this because my time is up. Ladies and gentlemen, take advantage of this. Okay. Keep in mind, if you sign up today, not tomorrow, if you sign up today, you get to come to my weekly analysis room that we have tonight, and you want to be there tonight. Okay. How long is a training? Is about an hour and a half to 2 hours max. Okay. But that's pretty much, how long it takes. But trust me, for $97, it's going to be one of the best investments that you can ever put into understanding how to read charts. I look forward to seeing you guys tonight if you sign up today in my analysis room, because there's some interesting things going on in the market today that I'll be able to show you. And if not, I'll see you tomorrow on the workshop. David, I'm going to turn it back over to you. Thank you so much. Love you guys so much. Anna, thank you so much.